Hello everyone, I am Dr. Ashish Dilraj, Head of the Department Commerce. Today we are going to discuss about one of the topic under cost accounting, that is tender price. Tender price is associated with unit or single or output costing. A step ahead. So, let us begin with tender price. The important things what we are going to discuss today is the meaning of tender, then major factors to be considered or what are the chief characteristics of tender costing, how we are going to find out tender costing, what are the important points under it, and then one practical question. So, you are going to get a practical idea how to prepare tender costing. What do you mean by the term tender price? A formal statement of price at which the goods are agreed to be supplied or work order is to be executed, which is sent in reply to an invitation is called a tender. So, when we are going to produce any material or article or commodity, or when we are going to render our services for any of the external organization or a company or institute, generally we are going to send them a statement that this is the amount by which we are able to produce the output for you, and that particular thing we called it as tender price. Then next is quotation price. Some of the time company asks us to submit our quotation. So, quotation price is a statement of price that is quoted for a work order to be executed or service to be rendered or goods to be supplied is called a quotation. So, when the company asks us to submit a quotation, we are going to prepare it. It is very similar to the tender, and we are going to find out our price, and only the specific price is going to be mentioned under the quotation. Now, the next is estimation price. An approximate piece of a work order or goods or service calculated on the basis of general opinion and judgment is called an estimation. So, when we talk about estimation price, when we talk about estimated price, it is going to be little bit increase or decrease as per the present situation. It might increase, it might decrease as per the requirement, as per the availability of other things like raw material, labor, etc., etc. But estimation price is just the estimate. We are not claiming that we are going to produce that article in the same price. There might be some changes or little bit of changes in the estimation price. So, this is all about tender price, quotation price and estimation price. Now, factors to be considered when we are going to fix the tender price, or when we are going to calculate the tender price. What are the important factors to be considered? Number one, quantity. Quantity plays a vital role in the calculation of tender price, right. So, we are going to calculate exactly on the basis of the actual output to be produced. The right quantity plays a vital role. That is why it is very important to calculate the tender price on the basis of a specific quantity or a particular quantity, right. Second is past accounting records. What was the previous data? What was the cost of the product which we have manufactured previously? That data is very much required in order to prepare the tender price, because tender price is prepared on the basis of the previous data, on the basis of the previous expenditure, and on that basis only we are going to calculate the tender price to be produced for a new product, then or the product we have to produce. Or then next one is carefully ascertain. We have to find out or evaluate or calculated the price very carefully. If we are going to miss one part or one item or one expenditure, it is going to make a wrong calculation, and we are not able to calculate the right amount of profit, or even some of the time we are going to earn a loss. That is why they said we have to be very careful at the time of preparation of tender price, and all the expenditure must be considered. Then next is cost sheet. In our previous lecture, we already discussed about what is cost sheet. When we are going to calculate the cost per unit, or we are going to calculate per commodity cost, or we are going to calculate cost per item, we are going to prepare cost sheet. So, here also we are going to calculate cost per item, cost per commodity, or whatever be the cost when we are going to manufacture a single item, that can be calculated on the basis of cost sheet. Then next one is proper allocation of cost. We are going to divide the cost in a proper allocation. We have to get the prime cost, we have to get the manufacturing cost or producing cost, or we are going to get the office cost or administrative cost, we are going to get the total cost, but we have to find out, we have to make the right allocation of cost in the right head. Then next one is preparation of statement of cost. As per cost sheet is preparing for one when we are going to calculate the total amount of production. When we are going to calculate the total amount of manufacturing, we are going to prepare a statement of cost. Then the last important factor to be considered is profit percentage. How much profit we are going to charge in our output. For example, if we are going to produce the unit for 100 rupees, we want to charge 10 rupees profit. So, our selling price would be, or the tender price would be 110. If we want to charge 20 rupees per commodity, then our selling price or the tender price would be 120. If we want to charge 30 rupees, then in that case our tender price would be 130. So, whatever be the amount of percentage of profit we want to charge, we are going to add to calculate the tender price in that particular specific area. There, this is the practical question. We are going to solve this question to know how to calculate or how to find out the tender cost of any product. The question is like this: the following is the summarized profit and loss account of Rajasthan Electric Company for the half year ending 30th June 2019. 1600 electric fans were manufactured and sold by the company during this half year. For the first 6 month data is given, profit and loss account is given, and according to this, material consumed is 64,000, wages are 96,000, manufacturing expenses 40,000, total sales during the said period was 3,20,000. 3,20,000 minus all these expenditure on the debit side, we will have the gross profit of rupees 1,20,000. So, by gross profit brought down 1,20,000. Out of 1,20,000, we are going to deduct all the indirect expenses which are given on the credit side, that is office salaries 48,000, rent and taxes 8,000, selling expenses 16,000, general expenses 24,000. So, when we deduct all these expenses out of 1,20,000, we will get the net profit. So, during the first 6 months ended 30th June 2019, our net profit is 24,000. On the basis of these expenses, now we have to prepare tender for different number of units, and the question says that the following estimates were made by the costing department of the company for the next half year ending 31st December 2019. Now, we have to prepare tender for the next 6 months, which will be ended on 31st December 2019. Information given is the output and sales will be 2000 electric fans. Now, the output would be 2000 electric fans, or we have to prepare the tender price for 2000 electric fan. The price of material will rise by 25% on previous half year level. There is an increase in the price of material by 25%. Then wages during this period will rise by 12.5%. That means we have to pay extra wages. How much extra? 12.5% extra if we compare to the previous cycle or previous 6 months. Then manufacturing expenses will rise in proportion to combined cost of materials and wages. There is an increase. How much increase? Combined cost of material and wages. Then selling expenses per unit will remain unchanged. There is no change in per unit of selling expenses. Then other expenses will remain unaffected by the rise in output. Rest all the expenses, there is no change because of change in the output. Prepare a statement showing the price at which each electric fan would be sold as to ensure a net profit of 10% on the cost price. Now, we have to prepare tender price by adding 10% profit on cost price. So, here is the solution for you. Dear all, first of all, we are going to prepare cost sheet for the first 6 months, that is for the half year ending 30th June 2019. So, number 1, material consumed 64,000. Then wages 96,000. In this question, there is no direct expenses. So, the total of material consumed and wages give us the amount of prime cost. So, prime cost is 1,60,000. 64,000 for material, 96,000 for wages is divided by 1600 to know cost per unit. When we divide 64,000 by 1600 units or fans, we will get 40 rupees per unit. So, the raw material consumed in order to manufacture one fan is 40 rupees. The wages which we have paid to manufacture one fan is 60 rupees. 96,000 divided by 1600. So, the prime cost is 1,60,000 rupees total and per unit is 100 rupees. Now, in prime cost we have to add manufacturing expenses or factory expenses or manufacturing overheads, which is in the question given 40,000. 1,60,000 plus 40,000 become 2 lakh. This 2 lakh is treated as work cost or manufacturing cost, which is again divided by 1600 fans, so that we are going to get per unit fan. Manufacturing expenses 40,000 divided by 1600, so we have 25 rupees per fan manufacturing expenses, and work cost per fan or per unit is 125. Now, in work cost we know that we have to add all the other expenses which are given in the question is office salaries. In the question it is clearly mentioned there is no change in other expenses. So, office salaries is 48,000, rent and taxes 8,000, general expenses 24,000. When we do the total 2 lakh plus all these expenses, we will get 2,80,000 as production cost, and 2,80,000 is divided by 1600 to get the production cost per fan or production cost per unit. So, which is 175 rupees per fan or per product or per piece. Now, selling expenses mentioned in the question is 16,000. 2,80,000 plus 16,000 becomes 2,96,000, and that is our total cost. So, the total cost of manufacturing of 1600 fans is 2,96,000 rupees. 2,96,000 rupees is divided by 1600, so that we have the total cost per unit is 185 rupees. The total cost per fan is 185 rupees. Sales is mentioned 3,20,000, 3,20,000 minus 2,96,000. So, the profit earned during the first 6 month of period is 24,000 rupees, and 24,000 rupees is divided by again 1600. So, we will have 15 rupees per fan of profit, and sales per fan is 200 rupees. After this, we are going to prepare a statement where we are going to calculate the tender price for how many fans? 2,000 fans. So, statement of tender for the half year ending 31st December 2019. Particular amount, 2 column for amount, one is for total amount, another is for per unit amount or cost per unit. As per the given information, material consumed is 2,000 and there is an increase. There is an increase. How much increase? Increase of 25%. Now, we have to calculate an increase of 25% on 80,000. So, 80,000 multiplied by 25 divided by 100, we will get the extra amount to be paid for material. Now, the total amount of material consumed for making 2,000 fan is of rupees 1 lakh. When 1 lakh is divided by 2,000 fan, we will get cost per unit, and that is 50 rupees per unit or 50 rupees per pen. So, here the cost of material is increased by 25%. So, we have to increase the amount by 25%, right. Now, second, wages. Now, there is also an increase in percentage 12.5 on wages. So, the total amount of wages is 1,20,000. There is an increase of 12.5%, that means 15,000 add for wages, 1,20,000 plus 15,000 total become 1,35,000 rupees for manufacturing of 2,000 fans. 1,35,000 is divided by 2,000 to know the per unit cost. So, when we do the total 1 lakh plus 1,35,000, our prime cost would be 2,35,000 in total. 2,35,000 divided by 2,000 fan, we are going to get 117 rupees 50 paisa per fan or per unit. We know that in prime cost we have to add manufacturing expenses or production expenses or factory expenses or factory on cost or manufacturing on cost or works on cost. So, that is given that there is an increase of combined cost. So, I am going to show you the working note for it. You can check it out. See, previous year The cost of material per fan is 40 rupees, now it is 50 rupees. Previous year the cost of labor is 60 rupees, now it is 67.50 paisa. The total of material and labor for the past 6 months is 100 rupees. Now the total for the current year is 117 rupees 50 paisa. So there is an increase of 17 rupees 50 paisa per fan or per unit. What is the increase in percentage? 17.50 multiplied by 100 divided by 100, the amount is 17.5%. So the combined cost of material and labor has been increased by 17.5%. Now, earlier we have the expenditure 50,000, now there is an increase of 17.5%. So we have to calculate 17.5% on 50,000. Now the new amount comes to, after adding that increase, we have the total expenditure on manufacturing is 58,750 rupees. 58,750 rupees is added in prime cost, that is 2,35,000. So the work cost becomes 2,93,750 rupees. 2,93,750 rupees is divided by 2,000, so that we are going to have the per fan amount, that comes 146 rupees 875 paise. Now in the question it is clearly mentioned that there is no change in the other expenditure. That means similar office salary, rent and taxes are same, general expenses are same. So office salaries are 48,000, rent and taxes are 8,000 and general expenses are 24,000. When we do the total, our manufacturing cost or production cost is 3,73,750, which is again divided by the actual output, that is 2,000. So the per unit cost is 186 rupees 0.875 paisa. 186.875, that is per unit cost. Now selling expenses, they said that per unit selling expenses are same, so that is 10 rupees. Earlier we are manufacturing 1600 fan, now we are manufacturing 2000. So 2000 multiplied by 10, the total selling expenses would be 20,000. Now we have to calculate the total cost. 3,73,750 plus 20,000, the total cost is 3,93,750 rupees, which is divided by the total output. So the per unit cost or per fan cost is 196.875 rupees. Now they are asking us to charge the same amount of profit as we are charging previously. So that is 10% on total cost. Total cost would be 3,93,750, we have to calculate 10% on it. So the 10% on 3,93,750 is 39,375. This amount of profit we have to add in our total cost to calculate the tender price. So our tender price is 4,33,125 rupees. 4,33,125 rupees, and when it is divided by 2,000, we are going to get 216 rupees 56 paise. So this is the way, by this method we can calculate the amount of tender price for any commodity. We are going to do the addition. If the price is going to be increased, we are going to deduct the price if the price is going to be decreased. When there is no change, we are going to take it as it is. So by that manner we are able to prepare our tender price. Thank you everyone.